Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same without wasting a single second of your time. Bada bing, bada boom, we go into the charts. So it looks like we have held this, basically this 382 level of the diagonal pitch fan to the upside here on the mean reversion path to the upside for the last 1, 2, 3, 4, 5 days, and we have 7 touches to this. Are we going to break down and continue further into the Hail Mary 1618 of the 24478 region of this bearish trend-based fib extension level, as the FOMC meeting is projected to pause hiking rates on Wednesday as widely expected to? Is that going to be the case? We'll find out at 2 p.m. Eastern Standard Time today. And with the bearish sentiment for crypto, will that play out in a positive or negative manner when the reality hits the fan? Let's find out after we go into the liquidity of the heat map for high block. What is that? Well, that's when people lock their liquidity into the charts to get burnt to a crisp for not using a stop loss. And we get to see where those crispy characters lie in wait, or their carcasses lie in wait. So we see yesterday we saw this pinging of liquidity, and they came down into this 25790 region to take out this $232 million character and his partner in crime at $131 million.
Fatality.
Yes, and they bounced off the liquidity, and you haven't really seen anyone enter just yet. The interest is lying in wait. All these small little pools of minnows just eating plankton around here, while the real news starting to come. So as it stands currently, there is this pool to the 100x up here at 26,473 that they have yet to hit, which is stacked up quite nicely with another pool over here at 26,443, as well as his partner in crime over here, 50x at 138 million over here. So it would be likely that they come back to these guys at the bare minimum. So if they go down first, then the chances of them coming up to that region go higher. These guys also opened into these candles here. So are they at break even currently? These guys also opened into these candles here. They're currently underwater. So these guys also opened into this candle here, which could be down in this region. So let's go ahead and expand our vision to the higher time frames and see where those possible pools may lie. Shout out to everyone here. What's up? What's up, DK? How you doing? Yeah, the crispy characters. The FOMC with Powell. Alright, so I skipped the 12-hour time frame, but it does show on the 12-hour time frame you are getting more shorts than long, so that just shows in the last 12 hours there is more short sentiment. I see a lot of people talking about how we're going lower, and usually if everyone thinks we're doing one thing, that could be the other, is the upside. Inbound on the 7-day time frame, we are also imbalanced up to the 27k region for shorts liquidity. So 7-day time frame is minuscule compared to the higher time frame, so we expand our vision further. Also up in the 28k region, you are getting double digits to the tune of $17 billion, up at 28.1 even. Their partners in crime also pushing the limits of double digits on the way, is up to 30k. The thicker regions in the immediate zone are down here in the double digits, down at the 24k to 24.5 region. I would say about $50 billion in the minimum range here, and you got some more down here thickening up on the sub 22k region, which has entered in the last end of May time period, getting hotter to this down in the long region on the monthly time frame, hotter than above. If we also expand our vision to the 3-month time frame, we previously saw this hit to the pools here. You saw a $180 billion taken off the table here on the 3-month time frame. So is this enough divergence to satisfy the belly of the market makers for their stab up into this region, or are they coming down further into the double digits of 50 million plus down into the 24.2 region? You have a good $200 billion more to grab down here before it starts to taper into 24K region. If you go to the 6-month time frame, you're also seeing that down at the 24.3 you have $100 billion down there, 90 billion at 24.6, 24.9 has 75 billion, and all the way down to 22.5 at $190 billion, with the other $300 billion pools starting to thicken up at 21.9 and 21.6. So a fair amount of liquidity down here, all the way down to the regions of 21.6 if we are to go lower. Once we get into this region, the narrative could be through for the longs, or you could get a big capitulation wick to the upside. After that, you do have these pools starting to form in the double digits to the tune of 90 billion up at 32.1 and above. When we start to expand our vision to the yearly, we'll notice some of the range from the previous June is now gone. So this is going to look thinner than before, although you still have 130 billion up at 32.4. So we will go to the 2-year time frame and see what that actual number is. And as you see here, the thickest pool is 159 billion up at 32.4, and other 100 billion pools do lie up in weight up in this 33K region and above, lest we forget all of these pools that are up in the 50K that are still shorting from up here all the way from March 29th 2022, and over here from December 25th 2021 you have all these pools still above shorting as well. So do we come down into these regions and justify coming to the 24K region to grab this near $300 billion of liquidity? It could be in the cards. This is where you would start to look for some divergence to try to take a play possibly to the upside if you believe in the continuation of lower, higher high, higher low, higher high, higher low, higher high, and so on this trend to the upside. If we go to the monthly time frame, we're going to go into our oscillators and see what we can glean off of this. So if we go into the Binance chart, we will see what we can see in this as we go. What we were talking about here on our oscillators is if we come up above, what you'd really like to see is a huge candle up above this range and holding on this cloud for this continuation. If it does go up, for it to be real, anything beneath this 236 of this bearish path is just a fake out before you continue lower. Our larger move here on the trend-based fib levels is here. You have this impulse retrace idea, which we had for you back here in May 6th, Sunday, when we talked about breaking the 236 and coming down into these regions. So we are still down in the 1 to 1382 region of this golden pocket of the bearish trend-based fib level. We are currently consolidating to consider going into the 16183 Hail Mary, or down into this 618 retracement of the range here at 23934. That also coincides with the liquidity of the 300 to the tune of $300 billion that we talked about if we are to come down into this region here. So we'll just put that on the radar just to see as an area of interest if we do come lower. We're going to throw on our oscillators now and take a look at what we can possibly glean off of the momentum. What is this indicator, you say? MomentumMaster.info for more. Throwing on the heads up display here, and scroll down to the features and toggle them if you like, or read about the components that we go over. All right, so on the daily time frame, it's interesting to note that that pitch fan idea we had out also happens to be this weighted moving average of the 200 on the daily time frame. We're getting the wick, buyback wick, buyback wick, buyback wick as we start to make this weighted moving average idea up. The previous cross down event could get negated if we hold this and have daily candles close above this one level and start to see this cross up, although that could all be for naught if we start closing beneath this weighted moving average level. So this was the idea I was talking about with the cloud angle here. If the angle continues in such a manner, we are seeing this shift ever so slightly. It moved a little bit more since yesterday, but this angle could be a preemption of what could occur. We've seen that happen before on other cloud ideas similar to this curvature here before we had this drop to the downside. So if we see this curvature happen here as we make a way possibly to the upside, that is just an idea to note. If we look at the 3-day time frame here, the 3-day time frame, one interesting thing that we put out the other day was that this Binance chart has a lot of volume entering in the cloud here, but if you go to a different chart, like this is the KuCoin chart, the volume on the cloud is less. So that means that Binance is potentially buying more Bitcoin as it starts to answer to the SEC for the possible repossession of some assets from American users. So we may not even look at the Binance chart in the future. Who knows? It just happens to be the largest one at the time. But if you look at the 3-day time frame, we are seeing the cloud in a healthy manner holding this range. Although if you pierce beneath it and start closing candles below it, then the liquidity suggests going in that region. If we hold this super trend at the 3% level, so far we've been holding it all the way back since January 10th. So this super trend level on the 3-day is noteworthy. We did have some buyback wicks on that before on March 11th. Let me just get out of B really quick. So we had this super trend level back tested and true. Here we did see these candles hold this level. So if we can hold this super trend level, if we come down to the 25.2 region and have buyback wicks that hold above the level of 25.228, then we could see this as a support structure potential. If we go down, the 3-day does close in 10 hours. I think that also coincides with the 5-day. If we look at the 5-day, also 10 hours time will close. Previously, I'm going to remove this. I don't want to have it. That's just an idea potential. Oops, let me have that cloud only remain. All right, so the baselines on the 5-day previously had this cross down event on the 16th. We went over that for you as well with the cross down on the 3-day, and you've been seeing supreme suppression of the price action by the baselines here. Are we going to see this continue, or are we going to start making our ascent? Once again, I said you have to come up above and start doing this for this to even start to curve and change the narrative structure. Otherwise, it's just suppression back down for this crossover event on the 5-day. We had also seen that there is a weekly cross down event that occurred about 5 weeks ago. 6 weeks ago on May 1st. So we saw this cross down event occur, and we are seeing the same suppression in turn. So in order to negate this suppression of the baseline, you have to get above it, obviously. So that is something you start to note on the lower time frames. The cloud is still strong here on the volume for the trend to the upside, and we are also holding that as well. If you won't break the weekly trend until 21,555 by the looks of it. If we start to make our way down into the time frames of the 22 and below, the 22 is getting a cross up event potential. Could be easily negated by the FOMC news. In a similar way, we had a cross down and a cross up. You do get fake outs occasionally, but they are noteworthy when they hold. They do give you some percentile worth noting. So are you going to see some sort of shoot up here into the liquidity zones we marked out for you in the past? 22-hour time frame also meandering down here. You are getting some bullish divergence off of the money flow and the RSI as of Saturday, June 10th. So these RSI bullish divergence crystals have been locked in on the 22-hour time frame on Momentum Master B. If we look at the 12-hour time frame, we also see that there was bullish divergence on the RSI as well. So the 12-hour time frame has it, and you are starting to get a potential rising sun event. We talked about the valleys not being tidal basins in terms of having this green double bottom here. We do have this sharp quarry-like basin here, but it's still a double bottom nonetheless, and you're getting this rising sun potential of the golden light coming to fruition in 10 hours time. It all depends on how the candles close of the daily time frame and the 22. So we are currently meandering around at the 50 level at an ambiguous point. The money flow is coming up above the RSI, suggesting that you chill out for a little bit here. If we go into the 6-hour time frame, we'll start to see that sell-off wick potential, and the cloud is thinning out here as we made this pierce up above it and sold off into that cloud. We punctured the cloud, it seems, and the cloud is starting to shift in a manner like so. Are we starting to see a potential, if we go down in a region like this, for a double bottom event? Are we going to see some sort of shift out of here? How low do we go is the question. Where is the liquidity to suggest that move? We did talk about the 24K region. If we go to that external liquidity range, we know that that lies down in the weight over here, but that would not be your double bottom. So it all depends on what the FOMC is bringing to bear. We have this current ascending channel that we are holding, seeming to hold, but most likely we will break down out of this into some sort of divergence down below. If you go lower, then possibly you will go higher. If you go higher first, then you're possibly going lower. There's a lot of volatility that's likely to enter during the FOMC meeting, so stay tuned for that. I'm not going to be online at that time. It will be about 2 or 3 in the morning my time. It's currently 10 p.m. So if we look at the markets, they will open in 10 minutes time. Let's check it out when that occurs. We have the 6-hour possibly looking to bounce off the 50 level here, although the rejection wick is strong as of this moment. If we go into the 4-hour time frame, 4-hour time frame also bouncing off the 50 level in similar fashion. So you got the 4, the 6, the 12 all acting ambiguous as we wait for the meeting to occur. So there's nothing we can preempt on these medium time frames other than the cloud curving and tapering in a manner like so. This cloud is still mighty thick as a sell-off. As we were going up, people were selling off their positions in mass by this dip down here, and we held that region, and we're currently resting just below the baselines, or sorry, just below the cloud. And if we go to the hourly, we're getting rejected on the cloud on the hourly and the weighted moving average by the looks of it. Also ambiguous city, but we are getting some hidden bullish divergence on the money flow that did not play out, but it could be lying in wait. We have the Williams still potentially could go higher. No entry models just yet. Going to the 15 looking like that alarm wants to come down on you. So the 15-minute wants to come down as of this moment. Let's see what type of liquidity has been pinged in the last 15 minutes. Maybe something interesting has come to fruition. What's up, Wendy? Tracy, how you doing? Nothing really interesting has entered just yet. Everyone's just chilling on the sidelines by the looks of it. Got some $22 million characters. Got more longs that entered right here than shorts. So they could come back down into these 100x for the meantime as they reset the 15-minute. So as you go into the lower time frames, the cloud is going to act more chaotic, but it does see that rise, retrace, continuation idea that plays out on those higher time frames. You pierce the cloud, you come back, you kiss it, and you're gone. This also happens to be likely a fib level, so even in this small idea, you do have these fibs that do play out. Let's just see what that was. That was a 0.5 bounce, shallow bounce. But you do get these bounce ideas off of the cloud that do occur. So you're getting a cross down event potential here. When the baselines are wide like this, it's more likely to continue than when they're crossing down like this. When you get a cross down event in a similar fashion, you had a cross down event here and you saw a drop of about 1%. So these baselines are the first sign of reversal. What are the baselines? Your first sign of reversal, it says here, they're one of the few leading moving average formulas on the market. So something to note. Every time you cross up, you see some move, cross down, see a move. These can be alerted to your phone as well. On whatever time frame you're interested, if you're a scalper or not. They're ultimately a scalper's dream. Shout out to the Momentum Master Cruise and the NASDAQ. Let's see what the NASDAQ is looking like. I'm not going to be trading the open. I'm just going to be on the sidelines, but it looks like the NASDAQ is getting to a level above its highs. It broke into this region. We were looking at a 236 entry pattern for a continuation long. If you were going to go up into the bullish territories, you could see upwards of 15,298 for the NASDAQ with all of the chip and Tesla and Apple and all of these news reports for tech companies. If they decide to not change their rates, not increase the rates, then you could see a retrace into the cloud here and bounce off. So far we've been holding the super trend on the hourly pretty accurately since June 8th. So we come back to that level, wick off of it. Will we come and wick off of that 236 long idea to continue higher? We got about 5 minutes for the open, and you're starting to see the cross down event on the hourly. Now, I don't normally trade on the hourly, but you try to get some intuition as to what the higher time frame narrative wants to show. Some people can use some Renko blocks, some people can use higher time frames. It's all about trying to see where the cross down events, not to be ignored. When you see this cross down and idea here, this could be coming down into this pool of liquidity. If you take this for what it's worth and go into this so you have this 618 bounce, the 706 model bounced off this before, where you're developing some internal liquidity and you're going to come lower. That could be a idea here. We're going to look into the 5-minute time frame. They're trying to hold this range here, but most likely it will come lower than that if it's attempting to hit the stops. And this could be some, you have an A, B, C to the downside, but 5-minute attempting to round out here on the nasty NAS. We got 5 minutes to open. Just to note, if you're interested in trading stocks, we do have a funded crew in the Momentum Master Discord, and we do go into what the NASDAQ has to offer. One 5-minute candle does contain more volume than an entire day of Bitcoin. When it does kick off, you will see this. So this is what we like to see. Down on the 1 minute, you get these clean cross up events, and you can see them on higher time frames like the 30-second and the 1 minute. we'll just go a little bit into what we kind of do with that, just trying something a little bit different here. Let me just turn this settings here, body. Let's turn this to 4 and this one to that. Oops. I think it was this one actually. So we had this. Sorry, give me a second. All right. So we can turn this to the 10-second entry model, and you try to look at these 3 time frames in conjunction with one another and try to see where you would get bullish divergence crystals here on the 30-second after a cross-up fake out, and it looks like we are attempting to reclaim the cloud here on the 30-second and pierce the 1 minute on the Nasdaq. Chaikin money flow also showing some bullish divergence, getting the rising sun potential on the 1 minute, although this could be 2 minutes. And yeah, if you look here, let's just turn this on really quick. So you're seeing the cloud kind of shift in real time here. So you're starting to see what this means with the cloud shift. You're getting the cloud reclamation, the shift, the kiss, the continuation with the weighted coming beneath your price, although you would have this cross down potential to think about getting out. And we're going to just watch what happens when the markets open, and we'll see the volatility and then go to Bitcoin and juxtapose the difference. Okay. So you're starting to reclaim the 30-second cloud by the looks of it here. Cloud is starting to shift, although you're not really seeing much buying volume, suggesting a weakness, and the cross down event potential, getting some volume to enter in a bearish manner here. Indecision also on the candles, also on the 1 minute, suggesting you would taper. So if you were in a long from down here, you would have taken profits. And this could be a ABC to continue higher, ABC. And there you go. And we're open. Boom! And this is where you would see a potential cloud kiss entry model slash. Oof. And this is where if you take that first pivot, you could potentially get paid. So when does the first pivot go in? That could have been your pivot because you didn't close beneath this bearish trend, super trend level. So that could have been your short entry to get paid. They're pinging the liquidity right now by the looks of it, getting indecision, starting to see the 10-second shift here. No volume stepping up to the plate. Looks like the bearish volume is winning out. Did they just trap a bunch of longs? By the looks of it, it looks like we're taking it lower to the 236 we outlined on the hourly intuition model. So we could be coming down for that pinging of the liquidity. It looks like they hook, line, and sinkered some longs, and they're heading to the downside. Rejection off the thick cloud, did not pierce or close a candle above it, and the volume not stepping up to the plate for longs. The longs just got bull trapped, and it looks like they're taking them down. And so this is what is the volatility of the Nasdaq. And if you can read this properly, this move could have been a very nice 30-point move and plus to get you a smooth amount of money, and you could be done for the day, and you don't need to trade for the rest of the day off that 2 minutes there. And there's still no volume stepping up to the plate of significance. This could be a B. Oh, there you go. You just broke the Y line, but only once. And that would be the Smurfington. Smurf would have grabbed that. A beast. ABC to the downside, continue to the 236 by the looks of it. The 1 minute cross down event with the cloud here is suggesting you continue lower on the NAS. So we already talked about what that higher time frame would be and where those levels are on this fib idea. And this is what I would be doing in the Momentum Master Discord, going over setups and whatnot if you were so inclined. So we're going to get out of this and just show you that's how the NASDAQ Open is like, what that's like, and we're going to go back to the charts and compare what happened with BTC with the Open. So BTC did have very much of the same move playing out, although the candles are a little bit sparse here, a lot of 10 seconds of nothing and rise and drop, because there is less liquidity, less volume, which means less ability to read what's happening, which is why sometimes the stocks could be the better option. So that's why we have to look at Bitcoin on these higher time frames, like the 15-minute cross-down event, which is occurring as we speak. And so, yeah, that small price gap on the NASDAQ futures could have taken you for a small play and a nice profit. Well, ladies and gents, we have a volatile day ahead. Please trade safe. Please have fun. And it looks like we will, whatever the case may be, if Powell does pause the hiking rates as expected, then that could be bullish news for the markets despite the FUD on crypto. So if you see some sort of fake FUD come out and we go lower first, that could be your double bottom entry if you are so inclined. Everyone seems to be more bearish or talking about levels at 23K and stuff, and we do have the liquidity down below. Let's go see what we pinged in just before we say goodbye. Let's see what you all are up to. So it looks like they just pinged in 39 million in shorts over the 22 million in longs, so they could feasibly come up to these regions. There's going to be a lot more of that happening. I'll try to keep you abreast of the situation, abreast, whatever you want to call it. I'll put the update as these pools ping in this manner and which side is imbalanced. So the 15-minute reset here on the BTC time frame, also the hourly, looking to get that rejection off the cloud. 4-hour indecision, 6-hour indecision, also rejection off the cloud as we speak. Getting the 6-hour ambiguity as well. However, the cloud is shifting in a manner here. Are you going to get a bearish retest, continue to the downside, or are we going to break above it and start to see this thicken up in the coming hours towards the daily candle close? Once again, the 3-day and the 5-day close tomorrow, so we should see an interesting close of those two coinciding. As it stands currently, we have the cross up event of the 6 and the 12-hour and the 4-hour still in our favor. We are holding the baselines, so those are not to be ignored just yet until they start to close beneath this one region. So also the 22-hour time frame is our passive support, getting a cross up event here as well. Not something I like to go against, even though we're seeing no volume step out the plate. We have the bullish divergence on the 22 and the 12 that could play out secretly. Well, ladies and gents, that's all I have for you as of this moment. We will see the volatility as the baton gets passed from London to New York in about an hour's time. You will see that on an indicator here. You see Asian range, London, New York. Just around the London close, you'll see some more volatility enter. So that also could occur as London closes. You can see this indicator for free using ICT Kill Zones by Tradinator. Please check it out. And that's about all she wrote for now, folks. So thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same with bringing you the fire, the precision, the accuracy, and all that fun stuff. And we'll